Hey everybody, welcome. On this video, we're going to draw an exponential regression trend line over the Bitcoin price. Okay, so here we are back in the charting engine. We have everybody's favorite or least favorite, depending on your perspective, Bitcoin price going back to Bitcoin Pizza Day, May 22nd, 2010, when our friend Laszlo made the first recognized, although there were certainly barter transactions before that, 10,000 Bitcoins for 2 pizzas. Transaction about 0.4 cents per Bitcoin price. Moving all the way through the 2013 boom, the 2017 boom, the 2021 boom, and subsequent retracement, consolidation to where we are today. As of the recording of this video, the data is as of yesterday, January 10th, 2023, $17,195 price per Bitcoin. Now let's go back to our pre-examples here. This is how an exponential regression is going to look on linear scale. Remember, we're trying to draw a line that fits the data. This is a very simple analysis. We have one independent variable and one dependent variable. In our case, the independent variable is time. The dependent variable is price. On this little example, you see that the trend line is on a linear scale. That means both axes are not stretched or compressed. They're just growing as of normally. And you see with an exponential regression on a linear scale, as we looked at yesterday with gold, it grows a little bit slow at the beginning and then increases at the end. And recall from our videos on the physical currency supply of the United States, the cash money in the system, that also grew at an exponential rate. We were using the time value of money formula then. We're going to use a slightly different formula here, but it's basically saying the same thing: exponential growth, compound growth. This is how it looks in nature. This is how it looks on a chart. And depending on the rate of growth, that would also depend on the steepness of this curve. And one thing I didn't show you yesterday with gold, but I'll show you here today because it's much easier to analyze Bitcoin's price on a logarithmic axis scale, is let's look at what happens to exponential regression on a log scale. Do you remember? How will that curve change if we change the y-axis, which is price, to log scale? Well, it will turn into a straight line. It will always turn into a straight line. That's an easy way to check yourself, to understand if the curve that you're looking at is exponential, has exponential growth. If you're calculating correctly, all the rest is exponential growth will be a straight line on log scale. So here you see our independent variable time, x, is still growing normally, but on the y-axis, we have stretched the bottom part of the axis, where you only get to $1 basically halfway up the axis. And again, don't worry about the base, whatever it is. It can be base 10, 100, or 2. You're always going to have a straight line. This is just for illustrative purposes. We're stretched on the bottom part of the axis. We only get to $1 about halfway up the axis. And then to get to $10, it's more compressed at the top half of the axis. So you see that it compresses down to where it's like $5 almost to the end of the axis, and then all of a sudden you're at $10. So once you transform a linear axis to log, you will see the exponential curve turns into a straight line. So that's what we're going to visit here. And one more thing, just to show you again, this is the formula of how to actually plot that curve. Y equals A times E raised to the BX. Y and X, again, Y is what we're trying to find. That's price. That's the dependent variable. A and B, they're the coefficients, okay? And to find them, all you need is a simple program like Microsoft Excel or Google Sheets or a graphing calculator or Wolfram Alpha, a more complicated statistical program. You can calculate those coefficients. A is the y-intercept. That's when the trend line would pass through the y-axis. B is the slope of the curve. And also notice this E in this formula, okay? So this is obviously a different formula than the linear regression, different than the logarithmic regression. Exponential regression has this E. Euler's number is what that is. 2.718. And I will explain Euler's number more when we get to continuous compounding. But basically, back to compound growth, back to a rate of change that basically we have our base, then we grow it by some interest rate, some growth rate, 5%. Then we now have, say if our base was 100, then we have 5%. Our new base to calculate the next rate of growth isn't 100, it's 105. And then we keep growing and growing and growing. That's compounding. And that is reflected here in E in Euler's number, which is basically the number that you need to find continuous compounding. So this is the formula, y equals AE raised to the BX. And having said all of that, having looked at the formula, having looked at these little pre-examples, let's move back to our main chart here, and we're going to plot an exponential regression trend line over the Bitcoin price and see how it does. And once again here, just to show you on this chart, time is our independent variable. Father Time stops for no one. We're pretty sure that the sun is going to rise tomorrow, so that's our independent variable in this analysis. The price is our dependent variable. That's what we're trying to find. That's what we're trying to predict. And again, I've said this before, not financial advice. I use that term loosely, mathematically, statistically. I'm not at all using that as far as what I think the price is actually going to be tomorrow. This is just statistical language there. The price is what we're trying to predict with the regression curve. So having said all that, let's go ahead and draw that exponential regression trend line. It's a big jump towards the end. You see that Bitcoin, this is where it's very helpful to have the tooltip for this charting software. And when you get into big numbers and you get into regressions that move exponentially, the tooltip is really going to be our friend here, because I want to show you the whole thing on the screen here. And this chart even goes further. I'll reset the zoom in a second. But if we just look at, say, let's look at the tooltip here. On a linear scale, we can't even see the data, right? Really at the beginning. It's hard to see that in general, but it gets even more extreme when we have this trend line there. So starting this trend line, Laszlo's price was under 1 penny, depending on how you judge the exchange rate, because it was a pound USD transaction, 0.4 cents, under 1 penny per Bitcoin on May 22nd, 2010. There you see it's rounds to zero in my data. And the exponential regression starts out here already at $2. So once we move into exponential and power and more non-linear trend lines on this channel, the tooltip is really going to become our friend. It's hard to actually show this if you don't use log scale. You know, we couldn't really even see the data before when we had the trend line. You see that the scale was $80,000 on the y-axis. When we put the trend line on, it goes up to $250,000. So the tooltip is really going to be your friend here. But let's follow the trend on linear scale. Let's see what it shows after all of these cycles in Bitcoin price. After 14 years, we get to, can't sort of reach it here, but as of recording, yesterday's price was a little over $17,000 per Bitcoin. But see where the regression curve is showing at this point, $183,000 per Bitcoin. That is what the trend line is predicting, based on all the prior data of where an exponential trend line would fall today, $183,000 per Bitcoin. And you notice the R squared as well, 86%. Hopefully you recall from prior videos, that has to do with the goodness of fit of the line, the trend line around the data, and it's 86%. So what does it mean? Well, for that, the easiest way is just to put in back the average, the all-time average. Now, I want to keep this on linear scale for now, just to look at it. You see how low the all-time average is. Okay, it's just barely popping out of the chart here. $8,500. Again, if you're curious, that's the all-time average price of Bitcoin. This dotted line that goes all the way across the screen, $8,500. And what that does is that's going to give us a basis for comparing how the price moves around the all-time average versus how it moves around the line, how it moves around the trend line. And here's where things have gotten pretty wild. Like we've seen logarithmic growth, we've seen linear growth, but exponential growth with Bitcoin gives a pretty wild curve. And certainly it's a curve that we haven't kept up with this year. I'm not saying it can't get back on this curve. It certainly could. It certainly could. But it seems pretty far away just in the last year, from where it traditionally has been. But nonetheless, let's analyze R squared. R squared, it's simply saying the takeaway from R squared is the price on the y-axis moves around the trend line, the black solid line. It moves around the trend line with 86% less variance. So if you look up or down, if it's above or below the line and measure the difference between the line each point, there's 86% less variance moving around the trend line than if you imagine how the price moves around the mean. And that makes sense. That does make sense because we see the price is completely under the mean here, and then it's completely over the mean here. So the goodness of fit of the trend line is definitely better than the mean. Again, as I said in last video, I hasten to say, be careful with R squared on nonlinear charts, which this is one. Because when you get to this nonlinear mode of analyzing data, it may be misleading, and you need to start to use something like the y-test. And here, we can actually see that the y-test isn't looking good for Bitcoin right now. I'm not saying it doesn't get back on the exponential trend, but the y-test doesn't look that good. And let's reset the zoom. This is where you can see it even more with the y-test. So now as we've done in the prior charts, we're going to pull this out to December 31st, 2030. And we're going to make that prediction. Again, this is a statistical term when I say prediction. I'm not saying I know what the price of gold is or the price of oil is tomorrow at 8:30 a.m. I'm not saying that at all. Just looking at the data, finding the coefficients, plotting the trend line, you can make the prediction. So the exponential regression predicts, and here again is where linear is not helpful, but let's just leave it on linear for now. We are going to take this to today. Again, one day before recording. Bear with me for just a second. Can't quite catch it here. Well, a few days before recording. $16,800 per Bitcoin on January 5th, 2023. And then the average will drop off and you'll just see the exponential regression line because that's the only data that's left. Look at where we are at the end of 2023. We were at, mind you, in current times, about $185,000 per Bitcoin was the trend. Now we're taking the trend line out to the end of 2024, and we're at $1 million. So only to the end of 2024, we get to $1 million per Bitcoin with an exponential trend. It's a big number. It's an exciting number. It's a fun number for people that like Bitcoin. Take what you will from that number. Let's go out again. We want to go out to 2030 here, as we've done for the prior charts. Let's go to the end of 2025. Price per Bitcoin, almost 3 million, 2.7 million. Now we're in 2026, end of 2026, 6.8 million. This is exponential growth here. 2027, end of 2027, $16 million per Bitcoin. And let's just stop counting, but you're going to see it's going to grow even faster. We're at $50 million for Bitcoin in 2029. Let's just jump up to the end here. December 31st, 2030, $265 million per Bitcoin. Based on all of the pricing data from May 22nd, 2010 to January 10th, 2023, plug in the coefficients, draw an exponential trend line. This is how it looks. This is exponential growth. And many things in the financial world do grow this way. Stock markets grow this way. GDP tends to grow this way. Population growth is also exponential. So the curve is not necessarily constant, right? We're at a constant growth here. we're at a constant exponential growth. The curve can change. For example, population is growing exponentially, but the curve is actually flattening. The rate of growth is changing. I'm not changing the rate of growth. All I'm doing is finding one growth rate based on all of the prior numbers and all of the prior prices, and then extending that out through time. So it's a big, big number. $265 million for Bitcoin by 2030. And this is you could find this. Remember that my coefficients will be in the show notes. You can plot this out yourself. You can use a statistical program. Just got to be accurate a little bit on the early days of Bitcoin where there's some gaps in the pricing data. My data might be a little bit different than yours, but it's going to be close. It's going to be close. And this is the exponential trend line for Bitcoin. Now, how do we check ourselves? How do we check that this is actually exponential? We put it in log scale. So let's expand the bottom half of the log scale and let's compress the top half of the log scale. And let's see what happens. There we go. There's our straight line. Exponential regressions on log scale turn into straight lines. So now we can much easier see the early years because we see that the data is expanded here on the lower part of the axis and it's compressed up here, and it expands at what rate? It's base 100. So $1 here, and then you're already looking at $100, a little bit more up the chart, then $10,000, a little bit more, then already a million, and then 100 million and 10 billion. So this is base 100. And again, it doesn't matter if your chart is base 100 or base 50 or base 2. However, even if your charting program automatically changes it each time, it's okay. You're still going to have the exponential curve be a flat line. It's just going to depend on the slope, but it's always going to be it's always going to be a straight line in exponential regressions. So back to our R squared again. Now, looking at it on log scale, we can much easier say that indeed, the price does hug the trend line, the solid line, much better than it hugs the mean. You see the mean is the dotted line. So the price it's been below this trend line. It's been above the trend line during the first MT Gox hacking in June 2011. Then the first real Bitcoin, there were two booms actually in 2013. About 100 and some bucks here in early 2013, then 1,000 plus bucks, $1,100 late 2013. Then the crypto winter actually almost looks like the trend line almost looks like support here. Was not support after the final collapse of the ICO boom and bust late 2018. And then you had this little drop and a little bit below during the early COVID years. But after that, when the meme stock trading and everybody was trading from home, the price was up again. But now this is actually a pretty big drop on this trend line. So the trend line that is calculated, we are way, way below the line. The only time that's ever really been happening is here, back in 2010. So we're getting close to the all-time average and we're way below the trend line. Now, first of all, this illustrates Bitcoin's volatility. Absolutely does. But remember, we are very, very early in the life cycle of the Bitcoin protocol and Bitcoin having a market price. We're very, very early. And in future videos, I'm going to actually make some standard deviations, draw some bands so we can see where we are right now, statistically, percentage-wise, as opposed to, say, where we were here or where we were back here. Standard deviation percentiles, they basically just show, okay, where are we relative to the average or the trend, in this case, the trend, compared to the rest of the data. So here we're low. You can even just use the eye test and you can see that we are well below the exponential trend line. So the eye test is going to help here. Again, remember I said it's 86% R squared. Indeed, the price hugs the trend line much better than the price hugs the mean. It didn't even touch the all-time mean until 2017. And then it's been above the mean since then. I'm not saying if it's going to stay above the mean or not. This is the way to properly understand the R squared goodness of fit measure. And the simplest way, the easiest takeaway, is that the relationship between price and time on an exponential curve is 86% better. It's 86% less variable than if you compared it with the mean, if you compared the price with the mean. So that's the exponential trend line. It's pretty incredible. As we said in earlier videos, Benjamin Franklin, Thomas Jefferson, Albert Einstein, they all in many ways talked about compound growth. I'm not sure which quotes are true or not, but you can indeed see how powerful such a curve, such a trend is. So on this video, again, not making any predictions that Bitcoin will return to an exponential regression or definitely follow an exponential regression and get somewhere close to $265 million per Bitcoin at the end of 2030. I'm not making that claim, but we do see that the trend line that we've drawn, Bitcoin's price has been above it and it's been below it. And right now it's quite a bit below the trend line. It's a very powerful trend line, and you can always check yourself that you're indeed looking at an exponential trend line by seeing if it is a straight line in log scale. That's it for this one. Thanks for watching.